Hello, everyone, and welcome to another edition of the Forex Technical Update. Okay, in front of us. What we have is a chart of the US dollar index, and just to give you some context, uh, looking back on the dollar index, this is the weekly chart. We were in a triangular consolidation pattern for the dollar index, and the market broke out of this triangular consolidation to the upside. Normally what we see is that when a market enters a consolidation, it normally breaks in the direction of where it entered. So if it entered in a downtrend, it normally breaks down. This happens around 80% of the time. But this time, what happened was that the US dollar turned around and broke out to the upside. And there are some folks that have been wondering why this rally has been so violent and why it has been so strong. Is because a lot of money and a lot of folks were seeing that this market was consolidating, and they were simply waiting to see which direction it will go and then pile on. Now, the question is, looking at the daily chart of the US dollar index, this move is a bit extended, and I believe that we are in for a pullback very soon. I believe we are in the latter third or so of the rally in the US dollar index. Now, does that mean we should just go out and sell the dollar, or go out and sell the dollar index? No, that's not what I'm advocating. I'm just saying that if you have long-term longs, you might be looking, your caution alerts will be up, and you might be looking for points to exit. Okay, last week we had a pretty small, pretty range-bound environment. We had a spinning top last week. So let's get down to the 4-hour chart to see what's happening. And if we draw a triangle, market was consolidating somewhat and has broken out of this consolidation on the 4-hour chart. So what we could see is that the market could come down and retest this downward sloping trend line and attempt to rally again. So support in the dollar index is down at this 94.20, 94.30 area, and resistance is currently on the 4-hour chart just below 95, and longer term resistance is at 95.50. So what does this translate to the rest of the currencies? And as you know, the dollar index is about 58% influenced by the euro, and this is a daily chart of the euro US dollar, euro USD, and we're in a pretty strong downtrend. But last week we see that the market broke out of this minor consolidation pattern that was happening here, and we could see a retest of this 136.98 level before heading down. If the market does, sorry, not 138, 113.39 level, we could see a test of that 113.39 level, right where the trend line is, and the market could head down. Or if we see some more strength, the market could take out this 115 level, which would indicate to me that that would be the first sign that we could be in for a greater pullback in the euro. Okay, taking a look at the British pound, this market has shown some strength off of the bottom, and we see the bottom here at 150 holding so far, and the market was able to take out this resistance. Let me Just go down to the 4-hour chart and mark this resistance here, this minor resistance level at the 152.69. Market was able to break above 152.69 and it has settled down below it and currently is at just above the daily S1 of 151.84. So this again could be the start of another pretty significant longer term pullback in the British pound, or rally in the British pound. Now if the market goes below this 150 level, the idea of a bottom is completely negated and we could see further selling pressure in the pound. Taking a look at the Japanese yen versus the US dollar, we see that the market is consolidating with support at the 116 level. So pretty strong support is at 116. As the market tested this 116 level, it has tested it twice now, and the market can't seem to decline below this 116 level. So this is pretty strong support, and what you could see is that the market could come down to support again, and if you get a buy signal, that could be a good trade if you get a buy signal down at this 116 level. And this happened on the 4-hour chart in mid-January, where we saw that a double bottom was put in and the market bounced off of the 116 level and is currently at 118.63. Okay, taking a look at the Canadian dollar, Canadian dollar USD, pretty strong up move here, and the market is just giving back some of the gains that happened over the last couple of weeks. Support is at, our medium term support is at 124, with longer term support at 121 and 118. I would say these are the support levels, and 118 in the Canadian dollar. Okay, quickly taking a look at gold, we see that last week I spoke about the fact that we're up against a Fibonacci retracement level, and the market has found some resistance at this Fibonacci retracement, the 6.618 retracement level at 1294, and we're currently in a downdraft. For the bears to relinquish control, the bulls would have to take the market above, firstly 1300, 1340, and then above the 1400 level. So these are your three main levels for the bulls to prove that they have the buying pressure to reverse gold. But until these levels are taken out, this market is clearly still in a downtrend, as you can see here. Okay, thank you very much for listening to another edition of the Forex Technical Update. If you have any questions, you can send them in info@acestrading.com, and I will see you next week. Thank you very much.